we're now joined by the management of Indraprastha Gas, Mr. Kamal Kishore Chatiwal, who's the managing director at the company, to talk about the quarter went by and what's looking good for the company going ahead, as well as growth opportunities. Good afternoon, Mr. Chatiwal.
Good afternoon, Mihika, to you and to your viewers.
Yes. Let's start with the quarter. I mean, net profit up 10% sequentially. EBITDA margins also expanded 200 basis points on a quarter-on-quarter basis. But what was the company's unit margins in Q1 and what's the outlook for FY25?
You see, sequential basis, there has been an improvement in the margin front. And if you look at EBITDA per SCM, we are now at 7.6. Earlier, it was 6.58. And our guidance has always been around 7 to 8 is the range that we tell the investors that we are comfortable with. In case it exceeds 8, 8.5, we try to pass on the benefit to the consumers. And in case it goes down below 7, then we make efforts to bring it back to those levels. So in the first quarter, despite 2.5 rupees cut, we were able to maintain this range. And in the end of the quarter, we increased prices by ₹1. So I think the impact of that would be visible in the next quarter. For the entire year, we expect the volumes to touch around 9.5 MMSCMD millions per day. And the margin guidance would be, EBITDA per SCM would be in the range of 7 to 8.
You answered my next question, but I also want to ask, could we see an uptick in margins in the next quarter given the price hike undertaken in the end of June 2024?
Yeah, as I said, actually it was done in just 2-3 days of the quarter. June end it was done. So impact of that entire 1 rupee would be visible in the next quarter. So we expect this margins to improve further. Unless the APM allocation reduces any further, which we don't expect. That currently we have 62% allocation APM and 38% is RLNG. We expect the same range, same levels to continue. If 1 or 2 plants they shut down, then the APM may slightly increase, but more or less it will be in the same range.
Okay, let's also talk about volumes. Now, the PNG industrial and commercial segment did see an 11% downtick sequentially. What was the reason for this?
Actually, typically for a CGD industry, the first quarter is the weakest of the 4. And the reason is that, the CNG segment is impacted by school buses going off roads, and PNG domestic is impacted by people utilizing this opportunity to go on holidays. So some of the days, the domestic consumption is not there and the CNG is also. So last year, for IGL, we did 8.2 and this year we are at 8.64. So that's a 5 to 6% increase. So we expect this thing to be one time in the first quarter and it to improve going forward.
Yeah, okay. And could you also see a pickup in CNG now that, schools will be, they have restarted. So could we see a pickup in the CNG segment in the second half of the FY25?
Yes, they have already started in July, first week, the schools have opened. So that improvement is there. And this has been the trend over the years, actually. So alarming. Rather, I would say sequentially is not the correct. There is a little bit of seasonality in CGD industries, very small, not very significant. But that is 4 to 5% impact is there. And it is for all CGD industries.
And do you also maintain that the industrial and commercial segment will be driving volumes going forward? What's the kind of change in mix expected in FY25, or would it remain broadly the same?
No, we expect the CNG meant to grow at the same pace. You see, there are 2 markets. One is Delhi markets that is absorbing the impact of, the DTC CNG vehicles being converted to EV. But outside of Delhi, the CNG segment is growing at 22%, and PNG is growing at 16%. Outside Delhi market, we expect the same to continue. And in fact, we are in discussion with some of the big industrial consumers. So what if those are materialized, then we see a significant, volume increase in our industrial segment, maybe to the tune of 30 to 40%.
Okay. And let's also talk about gas sourcing, Mr. Chatiwal. Now, APM gas allocation has come down over the past years. What was it in Q1? And how is the RLNG strategy working out for the company?
You see, we have around 62% APM allocation, 38% is RLNG. So that RLNG volume is still significant for IGL in the sense that around 4.5 millions is being contracted on a daily basis. And we have long-term contracts. Some 92 to 95% is firm contracts. And whatever window of 5 to 7% is there, we utilize that to source in case of any favorable downtick or the spot prices going down, then there are options with us. And out of that long-term contracts, 50 to 60% is Henry Hub linked. So over the past year, we saw that as compared to, say, crude linked contracts, the Henry Hub linked contracts were more favorable in the sense that, the 70% of that is already fixed and only 30% is the range around which there is a volatility. Because, the transportation, liquefaction costs, they are more or less fixed. And that forms around 70% of the cost. So that is more favorable in terms of volatility of prices.
Okay, got it. And let's also talk about Capex. Now, what's the allocation for FY25 and what has already been spent in Q1 of FY25?
Yes, this year we are targeting around 1,700 to 1,800 crores. Last year we did around 1,400. If we compare to the first quarter of last year, we were at around 201, 202 crores, and this year we have already done 290, 300 crores. That is the range. So 25 to 28% increase is there. And we expect the Capex to, this is the regular Capex, and in case of any inorganic opportunity is there, so that is outside of this.
Okay. And could you also give us an update on the EV charging segment as well as the CNG passenger bus opportunity that you had mentioned before?
You see, EV charging segment, we have some sites, some smaller sites, so that is progressing, but that is not a very, significant revenue generation or either on the top line or the bottom line. So that is progressing at a regular pace. Regarding the bus segment, there is some discussions with a few, state transport corporations like Rajasthan, as well as Haryana and Uttar Pradesh. And there has been a progress in the sense that close to 500, 600 buses we expect to be converted to CNG in this financial.
Okay, that's a good point to be made. I also want to talk about LNG trucking. Now, there's been a lot of conversations about LNG trucking and the kind of growth opportunity it has in India given the success in China. What are your views on the same, and how could it help the entire CGD sector as a whole?
You see, LNG, we feel going forward, 3 to 5 years down the line would be a major growth opportunity for all the CGD entities, and it will play a major role in increasing the gas share from 6% to say 15%, which has been the vision of the government. So LNG segment, we feel will play a major role, and we have already commissioned one station, and that is doing very well, 5 to 7,000 kg per day, that volume we are doing, in spite of the limited number of trucks. So going forward, we are also optimistic that we will set up a huge number of stations ourselves. And in case there is a big, all the OEMs now are coming out with models. Tata has launched a model, Ashok Leyland is coming out, and in addition to that, Blue Energy is there. So we have 250 to 300, and we already have an MOU with Concor. They also have a vision to reduce their scope 2 emissions. So they are sourcing some LNG trucks, and we will be setting up LNG stations at their terminals. So one is already under construction at Noida, and which will be commissioned in 7 months down the line.
Yes. Mr. Chatiwal, I also want to talk about certain geographical areas. How are the volumes in Delhi this quarter, and what's the outlook given the EV risk?
You see, Delhi market is fairly stagnant in the sense that whatever volumes degrowth is there in the DTC segment, so that is being made up by passenger vehicle segment. So outside of Delhi, including the NCR regions, that is the CNG segment is growing at around 22%. And the other, overall, it is growing at around 16%. Both the CNG and PNG is growing at around 16%. And in the first quarter, the domestic segment also has grown by 16%. That As you know, the domestic segment gets the 105% allocation of APM. So in case we are able to maintain the same momentum, which I expect it to continue, then it helps us in sourcing of gas also, that we get 105% allocation of domestic. So outside GH, we expect the same to continue. I mean, the share of Delhi in the previous year was 30%. Now it has come down to 70%. So we expect it to continue.
Okay. And are there any specific geographical areas that you see contributing to the next leg of growth? I mean, you all have a vast amount of geographical areas under your portfolio now. What are maybe the ones that will help growth in volumes going forward?
Yes. So the 3-4 major ones which we feel will contribute significantly. One is Meerut, Muzaffarnagar, Shamli. Second would be the Ajmer, Rajsamand, Pali segment. Rewari would also contribute significantly. And in addition to that, Kanpur and Fatehpur, as well as the Banda, Mahoba, Chitrakoot region. So all those will be contributing. And one of the experiment, or rather the proof of concept thing that we have done in Banda, which is a very backward region of the country, the Bundelkhand region, there nobody expected CNG to come, but we have converted 3-4 dumpers, big dumpers, because that is a mining, both sand as well as construction mining area. We have converted 5 vehicles there just to show to the people the advantages of CNG, and both in terms of economy as well as the environmental advantage. So we expect once the infrastructure to support those conversions is also there, a significant volume to come.
Got it. Thank you, Mr. Chatiwal, for giving us the opportunity and talking to us about the company, and we wish you all the best going forward.